Afternoon, everyone. We're actually very happy that you're able to join us today. We'll be doing a DeFi 101. First things first, I just want to thank everyone for actually coming in on time as well. We are excited to be bringing you our DeFi 101 event tonight. I just wanted to introduce our speaker for tonight. It is Stephen Macaskill. He's the CEO of Dasset, a digital asset trading platform. He will be talking about DeFi introduction, what is it about, why is it relevant for today, and how to be able to buy assets, and the active projects around DeFi.
Decentralized Finance, known as DeFi. About a year and a half ago, I gave a presentation on Augur. If you're familiar with Augur, it's a decentralized prediction market and one of the first projects on Ethereum. And it is a DeFi project, and it's part of the DeFi ecosystem, and something that over the last couple of years has grown by quite a bit. So what is DeFi? DeFi, although it's not a new concept, it is something that is becoming more pragmatic and more useful today. And it is a set of smart contracts or software programs that work with each other, that allow people to create financial products or utilize financial products in such a way that they're non-custodial. So you can do things like borrowing and lending without the need of a middleman. Now, non-custodial really means that they're not held by traditional entities like you're used to in the legacy financial system. The funds are held by software, and so it is held somewhere, and it's held by software, but it's not accessible by anyone else other than yourself. Another big aspect of DeFi is that it's permissionless. So as long as you have an internet connection, you have the ability to interact with DeFi. So you can borrow and lend, you can trade permissionlessly, and you can do a couple of other things at the moment without the need of having an identity like a government issued ID. And it allows you to do it without without the need of another entity giving you permission to access these products. The beautiful thing about DeFi, and this is why we're seeing the innovation moving so quickly, is that they're interoperable in that once a set of smart contracts or program or programs are created, they you can connect them to each other. And so when I start talking about what the next phase of DeFi is, you'll start seeing how some of these tools that different parties have made are coming together to create a very robust new financial system. And so they are primarily being built, they're being built on a number of different blockchains. And right now, we're seeing most of the growth and usability on the Ethereum blockchain. So, although Ethereum has this network effect, has most of the developers, and is quite robust, it's allowing these smart contracts on Ethereum to connect with each other. There are a number of other blockchains that are working in this space and coming out with solutions as well. And so this is where we're really excited to see the kind of innovation that's coming, because the industry or the DeFi industry is moving so quickly. Every day for the last few months, there's been new innovations, and things are moving extremely fast, and that's what's making it so exciting. And we kind of see what's coming up next. But once some of these things come out where we can start plugging in with each other, I think we're going to start seeing some really new and exciting financial products that we haven't really even been able to conceptualize before. So one of the beautiful things about DeFi is it allows people to now earn passive income on their crypto. So previously, when you bought crypto, you got capital gains or capital losses. So when you bought Ethereum, at $1, you would be able to earn if Ethereum went up in value. So you get capital appreciation, but it doesn't really give you passive income or residual income. And so this is where DeFi is creating an opportunity for people to now put their crypto to work. And so if you do have some crypto, if you are interested in not converting that crypto or not selling it because you're a long-term holder, this might be an opportunity for you to provide that crypto to other people to utilize in different ways. And so a big area of growth in the DeFi space is lending. So lending requires you, if you are a borrower, to provide collateral in the form of Ethereum or other assets. So you might need to collateralize an asset, put in something like 150% of Ethereum. So for every dollar you want to borrow, you have to collateralize it with $1.50 in ETH. And so if you are long on some of these assets, you don't want, if you're a long-term holder, you don't want to sell your Ethereum, you think it's going to go up, then you don't want to convert it to a national currency. But you may want to provide, you may want to borrow dollars to buy a house or spend it elsewhere, and without having to sell your Ethereum. So now you can provide the Ethereum as collateral, receive stable coins in the form of dollars on the Ethereum blockchain, which you can then use or convert or spend elsewhere. There's a new set of smart contracts called AMMs, or automated market making. And so this is an interesting area where people can provide liquidity or different digital assets to what's called a liquidity pool. And so with a decentralized exchange, somebody might want to convert one asset for another. If there's a new asset in the market, it may not hit a centralized exchange just yet. And so it allows the project who's issuing that token to release that token on a decentralized exchange. And it allows people to then take those assets and provide liquidity to those liquidity pools so that people can buy and sell them. And so by providing liquidity, you earn some money off the spread or from fees on for any trade that happens for one asset to another. Then of course, for trading, you are able to buy and sell and a lot of different digital assets on the Ethereum blockchain. And through that, it allows traders to do arbitrage between centralized exchanges and decentralized exchanges, because there are different prices and different amounts of liquidity between those platforms, and also provide arbitrage between different decentralized exchanges. And then also if anyone wants to just buy or sell their holdings, they can do that. And I'm going to actually go through a couple of real life examples. And then you can also stake tokens. So some of these decentralized exchanges and decentralized platforms are owned by the stakeholders of that platform. And so as a stakeholder, you can participate in the governance in terms of what tokens get listed on that decentralized exchange, what fees are charged, and how the protocol gets updated in the future, or yeah, so you can have control or participation in the governance of those projects. And so that requires you to actually own some of the tokens of that project and stake it so that you can have a vote and a say in that project. And so some of this will make a little bit more sense when I actually go in and show you some examples. So there's some major challenges right now. I like to compare some of this to kind of like command line for email. So it's kind of the early days in like the 90s, where we're still struggling with a lot of challenges. And I don't recommend, DeFi for everyone. I only recommend it to people who are willing to jump in and are willing to take that first step and break things, and are okay with things that are a bit clunky and not necessarily working as they're fully intended. So we have a couple of issues we've seen with the growth of DeFi over the last few months. A lot of transaction volume on Ethereum has increased the transaction fees on Ethereum. So basically, a lot of the DeFi applications are on-chain, which means that when you interact with any of these smart contracts, you are submitting a transaction to the Ethereum blockchain, which means you have to add a transaction fee. And when a lot of people are attempting to utilize the network, those fees skyrocket. Sometimes Ethereum fees of the last few months have gone up to $50, $60 per transaction, which is pretty absurd for what you're trying to do. Another challenge is a smart contract failure. So you have to trust that the software that's running these applications are sound. With smart contracts that are working with each other, there are potential for exploitation and all kinds of different errors and issues. And so this is where we actually saw maybe 4 months ago where there were some issues, and it was an Oracle issue. And so an Oracle is an entity or an organization or someone who takes data in the real world and adds it to the blockchain. So blockchain doesn't know what's happening in the world. So somebody has to go and put in the weather, what the temperature is, or what the sports outcome is, or what the price, the Ethereum blockchain has no idea what the price of Bitcoin is. And so an Oracle will take the price of Bitcoin and put it into the Ethereum blockchain as a smart contract so people can utilize it to create some of these financial products. And so if an Oracle's providing bad data, if it's incorrect data, then it can create opportunities for exploitation. And so, as I hinted at earlier, about 3-4 months ago, one of these smart contracts was exploited, and somebody was able to walk away with over $20 million from it. Now, as the industry is growing, they're becoming a lot more robust, and so we're people are attempting to break it, and as they break it, the holes and the gaps are being filled, and new products are coming out, and new problems are being found. And so I don't know why this is loading. Shouldn't say loading. Sorry about that. Okay, so it's really interesting to see how quickly this what's happening. So in the 1st of June, $1.5 billion in value was locked in these smart contracts. Today, it's over $10 billion, and it's growing very quickly. For the month of July, about $2.5 billion in was traded on one decentralized exchange. And then the first 2 weeks of August, that exchange hit $2.5 billion in trading volume. And so, and I'm actually going to show an example of this decentralized exchange and how it works. And so when we look at the legacy financial system, where we're seeing quadrillions of dollars being traded on derivatives markets, and some of these, if you look at the gold market alone, it's about $10 trillion in market cap and $120 billion USD a day in trade volume. This is a drop in the bucket. But the growth that's happening is really exciting, and the new products that are coming out are really exciting and promising. And so this is one area that's really starting to grow and push crypto into a new bull market. So what's next? So we're seeing a lot of solutions coming out that are attempting to solve the problems that DeFi are facing today. And so right now, a lot of transactions are happening on chain, so they're happening directly on the Ethereum blockchain, but we're seeing layer 2 solutions being rolled out, where rather than allowing the transactions to happen directly on the Ethereum blockchain, they'll happen in on a different protocol, where that protocol hashes the transactions and utilizes the Ethereum blockchain for the security of those transactions without compromising the trading or the integrity of the transactions for any kind of trade or lending or anything like that. And so we're seeing, we have a lot of lending coming in, several $1 billion of value is locked up in some of these lending protocols. And the next phase of implementation, which is coming out in the next 6 weeks, is leverage trading. So now you can borrow and long crypto. And you can do that without a centralized exchange. So we're seeing that coming in the next 6 weeks. A couple of them are already out now. For example, Octus, which is on here, you can do, you can create options for Ethereum and a few other products. Something really interesting is insurance. So one problem, as I mentioned before, are these smart contract failures. And there's now an insurance platform that allows you to insure your transactions on a specific smart contract. And we'll see if we can demo that today. Ethereum has really pulled ahead right now in terms of the network effect and the development, but there are many other platforms that are right behind it, and for example, Polkadot is a big one that has a lot of competition and is giving Ethereum potential run for its money. And so these are tokens on Dasset that are utilized for DeFi currently. So we have these current tokens on Dasset. Link is an Oracle token. We have a few stable coins like DAI. DAI represents $1 USD. It's an algorithmic stable coin that allows people to utilize for things like lending and trading. And then we have a few upcoming tokens. We'll be listing some of these tokens within the next week or so. As you can see, we have wrapped Bitcoin. So that is a synthetic Bitcoin product on top of Ethereum. And that allows people to trade Bitcoin on Ethereum and creates speculation or products with Bitcoin through smart contracts on a different blockchain. So this is really exciting to see that that what's happening on Dasset and some of the things you'll be able to access pretty soon. I was highly recommended not to do a live demo because live demos always go bad, but against the recommendation of people, I've decided that I'm going to go forward with this, and so we'll see how it works. And so I'm logging into a Dasset account. I'm just adding my 2FA. What I'm going to do is pull some tokens off, or buy some tokens on Dasset, transfer it to a wallet, and show you how you can provide liquidity to a decentralized exchange to earn some passive income and also provide some lending. And so I deposited $10,000 into my Dasset account. I'm going to make a purchase for some tokens. Let's see here. Some Ethereum. And so we'll buy some Ethereum. We'll buy some DAI. Let's buy some DAI. Okay. And let's buy some, let's see, what else do we have? Let's buy some Compound. So Compound's a platform for lending, and I do want to emphasize that so you can utilize a number of different tools for DeFi. Going to be using MetaMask. We do not endorse MetaMask, so just letting you know that if to do your own due diligence. This is not a product that we have built or have audited ourselves, and so we cannot recommend any specific apps or tools to utilize with DeFi, or even recommend any specific smart contracts to interact with. It's I will say it's all highly risky, and so anything that you do, make sure that you do the research and make sure that you're taking every precaution to secure your funds. So MetaMask is an app that is like a browser extension. It connects with a hardware wallet, so you can connect it with your Ledger or Trezor, and so you can leave all your funds on your hardware wallet if you don't want to put them on a wallet app like MetaMask. And so what I'm going to, and setting up a wallet, installing MetaMask on your browser is fairly straightforward. After it's installed, it'll ask you to create a wallet. After you create a wallet, what you want to do is back it up. You always want to make sure that you're writing down the seed and you put that somewhere safe. And so here's my Ethereum wallet. I've already set it up. I've already written down the 12 words. I'm not going to share that. But I already made a purchase for 100 ETH and made a deposit there just to make sure everything's working. I'm going to withdraw some ETH from my Dasset account. I'm going to send it to this wallet that I've created. I'm going to enter in my 2FA code. Oops. Withdrawal. And so I'm withdrawing this crypto from my Dasset account. And so because it's a centralized exchange, we batch transactions. And and then once we broadcast that to the Ethereum blockchain, you'll be able to see it in your wallet. So it takes a couple of minutes for it to show up in your wallet. And so that's why I also deposited a little bit of ETH so we can get started right away without having to wait. So I'm going to withdraw some DAI. So DAI is an algorithmic stablecoin. So how it works is you collateralize, if you want to create DAI, you collateralize it with Ethereum at 150%. And then you create one DAI, and one DAI is representative of $1 US. But as it's an algorithmic coin, you know, there could be black swan events where it is no longer pegged one for one with the dollar. It's a stable coin isn't always 100% stable, unlike as the name sounds. So I'm going to withdraw some DAI. Okay, I'm going to withdraw some compound. And there we go. All right. So let's see here. The Ethereum's already in my wallet. You can see I've withdrawn the Ethereum from my Dasset account. So I am now I have the funds here. I can go to Etherscan, which is a blockchain explorer for Ethereum, and you can see the Ethereum there. So the first thing I wanted to show you was this decentralized insurance product. And so this is a smart contract on top of the Ethereum blockchain that allows you to buy coverage for smart contract failure. So let's say that I want to provide liquidity to a decentralized exchange like Uniswap. And so I'm adding my tokens into the smart contract, and I'm unsure whether that smart contract has been audited or safe or can be exploited. And so what I'll first do is go and buy some insurance. And so what I'm doing, I just visited the website. I don't have to use an email or password or anything to sign up and get started. I have this MetaMask wallet. All I have to do is connect my wallets, which I'm essentially interacting with the Nexus Mutual smart contract. And so here we go. I'm ready to go. And so what I can do is I can buy some of these tokens, Nexus Mutual token. And so what I'm going to do is, so first I have to buy some membership. And so I have to buy membership to the insurance platform. What I'm going to do is increase my fees. And the only reason why I'm going to do that is so that we don't have to wait around for the transaction to be confirmed on the blockchain. And so, as you can see, the fee for this transaction is $3 which is quite high. So I am spending a lot of money to interact with these smart contracts on the Ethereum blockchain. So the cost of membership's 0.002 ETH, but I spent a lot more just to send that transaction on the Ethereum blockchain. And so you can see here's the transaction, and it's waiting to be confirmed by the on the Ethereum blockchain. So I'm waiting for the miners to pick up this transaction and confirm it. So looks like it's taking a little bit of time, and we'll wait and see if that happens. So while that happens, what I'll do is I'll bring up next platform that I wanted to show you. So this is Uniswap. Uniswap is a decentralized exchange that allows me to convert one token for another one. So I'm going to connect my wallet. I don't have to use, I don't have to give them my identity. I don't have to show them my email and password. I don't have to show them, who I am. I don't have to give them blood samples, like sometimes like you have to do when going through AML KYC. And so, so I've just connected my MetaMask wallet to this decentralized exchange, and you can see there's my balance. I can, utilize or spend all of it if I want to convert it for another token. What we'll do is we'll buy something called Melon. And so when I enter in, I want to buy 5 ETH worth, you can see what the price is per Melon. You can see what the price impact is. So this means what's the slippage. And so, the more you purchase, the bigger the price impact. So if you buy 100, you're going to be moving the price on this decentralized exchange by 30%, which isn't really ideal. Let's say if you're just buying one, so your fee is 0.003 ETH, but I'm moving the price by nearly 0.5% when I'm making that transaction. So what I'm going to do is swap this token on this decentralized exchange, because Melon is not on Dasset. And I'm just seeing this transaction hasn't been confirmed yet. And so this is partly why it wasn't advised to do a live transaction, because these, we have to wait for them to confirm on the blockchain before we can do the next transaction. And so, so if we look at this transaction, look at that, it's processed. So if you look at Etherscan, you can see that I essentially interacted with this smart contract. It cost me 0.002 ETH, 80 cents to become a member of this insurance pool, but the transaction cost to buy that membership cost almost $4. So now I'm a member. If I hit refresh here, should work now. So now I can buy some ETH. Oh, okay, maybe I need to do some AML KYC to take the next step here. So I'm not going to purchase insurance at the moment, but because I'm not going to be locking any funds into any smart contracts for a long period of time, but you can essentially buy coverage for a number of different, so these are all the different smart contracts or decentralized or DeFi products that you can buy cover for. So if if you want to put $100,000 into a smart contract, you can buy $100,000 worth of coverage for that smart contract. So if that smart contract gets compromised, you're covered. So maybe, if I want to buy coverage for 10 days and I want to spend 1,000 ETH, they might not let me get a quote because I haven't bought any of the NXM tokens, but the coverage is 100%, and the cost is actually quite minimal. And then as a token holder, you can stake on different smart contracts if you've audited them yourself, and by staking it, you can potentially earn some of the fees from people who are buying coverage. And you can also participate in the governance of this token. So yeah, so this is a really interesting insurance product that is for Ethereum, and definitely something that I recommend if you want to move into the DeFi space. And so that transaction is already processed. So what I'm going to do is swap one Ethereum for 8 melon. As you can see, I'm going to lose about 0.5% in slippage. And what it's going to do is ask my wallet to verify that transaction. And so basically, I'm using my private key as my digital signature to say I'm validating this transaction and I'm allowing it. What I'm going to do is actually increase the fees so that we don't have to wait. And so I'm manually updating the fee. And as you can see, I'm spending almost $9 on this one transaction. So this is going to the Ethereum miners to confirm this transaction on the blockchain. And so what I'm doing is I just submitted 1 ETH to the Uniswap contract to this liquidity pool, and I'm waiting for it to be confirmed by the network. And once it's confirmed, I will receive roughly, 8 melon. And so we'll see how much melon I get from that once the transaction's confirmed. There we go. It's already been processed. And now I have 8.09 melon from that conversion. And so what I just did was used a decentralized exchange to convert Ethereum to another asset. So now maybe I want to earn some, I have some Ethereum, I have another token, and maybe I want to, I don't want to sell it, I want to keep it long-term. And so maybe I want to provide liquidity. And so let's see here, we have compound. So what we'll do is maybe add 1 ETH and 2.2 compound as liquidity to the ETH compound liquidity pool. So what I'm doing is I'm allowing people to buy and sell compound with my funds. And so anyone who wants to convert Ethereum to compound or compound to Ethereum will be able to, using this decentralized exchange, and I get to, and by providing liquidity, I get to receive fees and earn some passive income from those fees. And so what I'm doing is first approving the transaction that I want to make on the Ethereum blockchain. So I'm approving that I want to use these funds. Once that transaction goes through, then I can supply these funds to the, okay, I've already approved it, so I'm just going to refresh here. I already approved it. So as you can see, this is, you know, you sometimes have these um, uh, uh, just a little bit clunky. Okay, there it goes. There it reads that's connected. And so what I'm doing is now I'm sending my Ethereum, I'm sending my compound tokens to this liquidity pool, and so that other people can buy and sell with my funds. So so by providing this liquidity, when other people go and purchase you know, compound with Ethereum, then I will have a little bit more Ethereum and a little bit less compound. And then if somebody goes to sell compound for Ethereum, then I'll have a little bit more compound and a little bit less Ethereum. Just, increasing my fee. As you can see, so it's costing me $10 to interact with the smart contract, which is pretty high. You know, it makes it infeasible long term if we want to scale and have trillions of dollars trading on these in this ecosystem. We can't have fees this high. You know, I'm going to have to earn at least $10 in income to cover the fee of just adding these funds to this liquidity. But you know, it's early days, and they're with these layer 2 solutions, I won't have to spend transaction fees to trade or utilize some of these smart contracts. And so, so yes, there's some solutions coming down the line in the next few months that will address some of these problems that we're experiencing today. So I've just added these tokens as liquidity to this decentralized exchange. And so if I hit refresh, I should be able to see that I have a liquidity pool. And I'm actually going to move on to the next thing. So I want to show lending. So you can also provide funds for lending, so you can earn interest. Earn Finance, it's a fairly new smart contract that was released that allows people to borrow, lend and borrow. I think there's about $1 billion locked in the smart contract. And so if you look at these interest rates, if you want to lend a US dollar stablecoin, interest rates are currently 5.5%. And so that's a lot higher than what you get at a bank, but the risk is different. You don't have to worry about the bank going out of business, but you do have to worry about the smart contract being sound. And then you have to make sure, if you're lending a stable coin, make sure that the stable coin is sound as well. So what I'm going to do is provide $500 in DAI. I'm going to lend it essentially so that other people can borrow it, so that they can use it for trading, or if they have Ethereum, they don't want to sell their Ethereum, they want to provide it as collateral, so that they can borrow dollars and use them however they see fit. And so just increasing my fees, or my transaction fee on the Ethereum blockchain. This one's about $350. That's USD in fees. Confirming that I want to interact with the smart contract and lend these stable coins. And so by lending, I might want to go and buy coverage for the $500 that I just added to this contract. And so at the moment, this would be the interest rate that I'd be earning on the funds that I'm providing. One more thing I want to show, because we're starting to see a lot more innovation. And this is a decentralized, this is a set of smart contracts that allow you to invest in other projects or other smart contracts. So if you see somebody who is buying or selling or providing a certain set of tokens to various smart contracts for liquidity, you can invest in that pool essentially and earn any interest or that's made in that. So it's almost like it's a decentralized management fund where you can provide, you can essentially provide or invest in a fund where other people are managing it, but you're interacting with these smart contracts so that you can pull your funds out at any time. You can shoot, there's essentially this leaderboard that you see where you can you see the top earners. It's all because it's completely transparent. You can see what's succeeding, what's not, what the assets they're investing in. So this smart contract is investing in a number of different tokens and assets. And so by investing in this fund, you're essentially investing in these various assets that are being held in this smart contract. And so so it's essentially allowing people to create almost like mutual funds or investment funds where they're not really managed by a company or a middleman that's holding your funds. It's managed by these smart contracts. And so we're starting to see with lending, we're starting to see the next phase of adoption or the next growth, and that's leverage trading. Once leverage trading comes out, if you've ever followed what happened with leverage trading in the crypto world and centralized exchanges, it really grew the market, and now it's going to allow a lot more people to trade various assets and without utilizing or trusting a company in the middle to manage those funds. And so we're starting to see a lot of exciting, interesting, weird projects coming out as well. For example, there's these tokens that have new dynamics, like they're deflationary, or they have certain governance protocols or staking mechanisms. Some of them are very similar to a pyramid scheme, and so this is where you want to look at the underlying software and how they work. A lot of it's very experimental and very exciting to at least see the transition and movement into this next phase of growth for the industry. And so I'm going to leave it at that.